All right, guys, welcome to another video on the advanced harmonic patterns. Right now, we're going to be discussing the Gartley. I had this on my Telegram already marked up some time ago, so I wanted to share that with you. I'm going to draw it out as well. But again, as you can see, like I did in the other videos, it's all kind of written out. It's better for me to see it written out as far as the ratios are concerned, instead of looking at pictures and so forth and so on. So I'm just going to go over basically what that is for me. So my X to A equals a B. For a Gartley pattern, the B is going to equal a 61.8. Sorry. So your B is going to be a 61.8. Your C is going to be a 382 to 886, and your D for Gartley will be a 786. You'll also use a Fibonacci ABA extension to give you either a Fibonacci cluster or a price reversal zone, and your ABA would be a 1272. Your take profit levels would be from A to D, and a 382. 718, 61.8 would be your take profits. This one says take profit 1, but it should be take profit 1, take profit 2. And you see it's actually all drawn out here. So from your X to your A, your B will be a 786. Your C could be anywhere from a 382 to a 886. You see here it landed on the 786. Your D point would be a 786 here with a confluence level of 1272. Now, when you have two Fibonacci's lined up the way that this is lined up, this is a very, very strong level of support. So you want to make sure that when price gets there, watch it very carefully, because it's going to be a nice reaction there. And of course, you see your take profit 1, 382. Your take profit 2 would be a 618 from that perspective. Okay, so let's get to the charts. So again, back on the Euro USD dollar daily time frame, we're looking for a Gartley. And again, remember what we talked about, impulse legs. So you see an impulse leg, you see a pullback, and you see here, and you say, well, it has come down to the X. So if you look carefully, you notice that it did not close below. Let's take this off so you can see it. It has not closed below my A point. In fact, even though it did come down to touch this level of support to test it, price actually closed above here. You can actually see that very clearly. This is where price closed at right here, right? And that's where price closed above it. So it did create a higher low. Okay? So we're going to take our measurement tool. We're going to go from X to A. And we see price right here rejected at the 618. That's my B point. Now, my C point is going to be anywhere from a 382 to an 886. Let's see where price is. So this is my B. You're going to use the wick, not the fib. You're going to use the wick to wick. Actually, I got that wrong on this right here. So from A to B, you see where price actually tested and rejected off of the 886. I'm not making this stuff up. I'm not making this stuff up. So my X, my A is giving my B. My C is 886. And guys, something you're going to start to realize is that without even you measuring, you're going to be able to tell where price is actually stalling out at. You know, you're going to be able to look at this and say, oh, this is 886. It's so close to the 100 point, the zero. So you know price is, this is an 86. Now for a D point for a Gartley, you're looking at a 786. So what is that telling me? Well, look at the candle right now. We're looking at a very bullish market. So it's very likely that price is going to come up to the 786. You're looking for a Fibonacci cluster. So you're going to go from A, B, you're going to use the fib, right back down into A. and you're looking for a 272, right? And look where it's at. 272 and 786 line up perfectly. Perfectly. And so we're good to go on that one. Some people use the wick, the price they come up here, but I use the Fibonacci. Just again, just a different option. You can go from Fibonacci to Fibonacci. Some people use the price extreme, which is where price actually went, even though it was rejected. So then that would really turn this whole box of 786 to 886 into the actual zone. Because you never know, news can come up, anything. Price can just reach up there and just drop down and give you a long wick, as it has done here. But even though it closed above the 886. So this is some little techniques and things you want to look out for when you are actually trading and you understand price action and things like that. Okay, so let's just bring this back down. Let's bring it down to 32. A nice Fibonacci cluster. And it's actually lined up with one of my EMAs as well. So most likely price is going to reverse here. In a way that this works. 61.8, and 86 right on here. And then there's my 786 with my cluster as well. So there's your Gartley. That's what price can be doing. And being that, there's something extra to help you as an add-on in your trading, understanding this, since this is the major market structure leg, this is the high. You know the price, I'm sorry, I don't know how I got there. As long as price stays below here, you're still in the down zone. So even if price did come up into the zone here, which it very may well wick up, we're still in the confirmed downtrend. It hasn't broken this major structural level. And this is actually creating still a lower high. So you understand how it's something to put it all together. So let me just get rid of that right there. Again, very simple. It's just another way we can find harmonic patterns. I usually remove all the markings so I let my charts look nice and clean. You want to make them look nice and clean. I know some people they leave the B point 61.8, they got the B point here and so forth, but I don't want to keep changing my Fibonacci tool. So once you know what your tool is and how it's working for you, you can leave it. You just know where your D point is. You're looking for an X, an AD, for your take profit levels. Your 382 will be right here. And use your 61.8 as well. So what's going on in this area here? Do we see any structure? We see some structure right over here. So it lines up. And look at that, the market has opened. And we have a 61.8. So I'm going to leave this here. We're going to see how this one plays out. And then we're going to go from there. But anyway, that is your bearish Gartley. Why it's called bearish is because once price hits and rejects, it's going to fall down, possibly down here. So that's what I'm looking for this pair. I'm sorry, I just started getting into trading mode now that I know the market is actually open right now. It's actually Sunday at 5:22, but that's a different story. Anyway, bearish Gartley. Again, I'm going to take this out for you just in case, even though it's going to be on the website. Right now, we're looking at the bearish Gartley. Your X A equals B, and that B for Gartley is a 61.8. Your AB equals C, and your C equals anything from a 38.2 to an 88.6. A message right there. And then your D would be Your XA extension equals D, and that would be your 786. You have an ABA, fifth confluence, and that equals a 127. Your A to D equals your take profits. Your take profit 1 is a 338.2, and your take profit 2 is a 61.8. Okay, so I'm going to leave that up here. You can always refer back to this. Your ABA is always A, B back into the A. Okay, so hope you enjoyed this video. Just try to keep it simple, short, and sweet. Any questions, hit me up. Talk to you later.